What's up everybody, welcome to the Stocks channel. My name is Corey and today while we did have a flat day in the market, there's still a lot going on beneath the surface that you won't want to ignore. We'll get into all that in tonight's episode, so first up let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.09% and it was a relatively flat day and we printed a perfect doji candle which completely represents indecision. That's exactly what you would expect to see at this level because I could literally see the stock market going in either direction from here. Remember that you always want to be prepared for any scenario, and right now we still do have the bull trend on SPY, and if you look at the weekly chart you can still very clearly we are in a very strong bull market. So don't rule out the possibility that we can easily bounce off of this support level and still come up here to form a brand new all-time high at these price targets in the 480s. If you're just buying into fear mongering and you think there's no way the stock market can go higher in a bull market, then you're completely doing everything the wrong way. So don't rule out this possibility as long as we have the bull trend that we can still break out to go higher. Now the next possibility is we do have 3 more support levels to the downside, and those levels are right around SPY of 464, 462, and then this full gap close critical support right around 455. If at any point SPY starts closing below 455, then you are very likely going to see the full-blown stock market correction in the magnitude of 10 to 15%. So there's no other way to view this market other than to stay objective and follow the price action. If we start to bounce off of here, we will hold on to the bull trend, and the next bullish breakout will be back above about 472. So watch that critical breakout above 472, and then we will be looking to see brand new all-time highs on a break above 478 with price targets up there at 483. Now if we start breaking down below 467 to 468, you're looking for the critical supports at 464, 462, and 455. It's really that simple, so don't overcomplicate it, but you still need to put in the work and you still need to show up each and every day and follow the price action. Don't ever just assume that something has to happen. Let the market prove it to you, and there's no way that I'm going to tell you the stock market's going through a full-blown correction when we're in a macro level bull trend and we're still sitting above these very critical support levels down here. So stay objective, follow the price action, and stick with the trend, which is still bullish. Jumping over to the NASDAQ 100 triple Qs, again we had a very flat day and we did only go down 0.07%, and the triple Qs did hold up above that very critical support level right around 383. Remember, as far as we know, this is a higher high, higher low situation, and we can't say we're going to break down below this low until we actually see the price action do it. I know a lot of people like to just assume things are going to happen and then they put all of their bets on that direction, and when it doesn't happen they have no idea what to do, and that is not how you trade the stock market. Make sure you know your entries and exits, and that includes knowing when you're wrong to take a loss before your loss turns into something much bigger. So if you're shorting this market and you see the triple Q starting to break out, you need to get out because we could still go to new all-time highs. Now on the triple Qs, it also does look possible we continue to consolidate and form somewhat of a wedge here until we can see a decisive breakout in either direction. But either way, you can clearly see even in the wedge case scenario, if we do bounce off support, we still need to get all the way back up there to the resistance trend line, which is right around 400 to 402. So don't rule out the possibility that we could bounce off of this support level and go much higher, and definitely don't rule the possibility if we break through support that we could see a full-blown correction. Be prepared no matter what happens, and you really shouldn't be over leveraged because we don't have any clear direction in the stock market. If you're still leveraging with a ridiculous amount of options or a ridiculous amount of margin, you will not be trading for much longer because this is going to be a very tricky stock market year. Don't just assume whatever you did in 2020 will work again, and definitely don't assume whatever you did in 2021 will work again because this is going to be a very different stock market. You'll notice the longer you trade, the more robust your trading plan needs to be because every year is slightly different than the previous, and there's really no years that are exactly the same. So if you find that your trading plan is only working in certain instances, it's time to start refining it and finding out what's going wrong and starting to fix it. On the triple Qs, you're looking for downside support at 383, 379, and 374, and if we start breaking below 374, you're likely going to see that full-blown stock market correction. To the upside, you're looking for resistance at 387, right around 390, and the bullish breakout will be back above the 20 simple moving average, which is going to be right around 393 to 394. Above that, we're very likely retesting the 400s, and we could still see a bullish breakout. So follow price action, and remember, if we switch this over to a weekly chart on the triple Qs, we are still in a macro level bull market. We still do have the bull trend, and we are still above support. So I really don't understand all of the narratives out there about a stock market correction and a stock market crash because we're still above critical support and we're still in a bull trend. Jumping over to the Dow Jones, you can see we are down a little bit more than the rest of the indices, going down 0.47% today, but that's really not that surprising because the Dow Jones was also the highest of all the indices yesterday. We're sitting right on top of the 13 EMA, we still have a bull trend, and we're still above the breakout level right around 361. So look for that critical support level on the Dow Jones at 361, and as long as we hold above that level, we should hold on to the bull trend and we could still see new all-time highs. The bullish breakouts will be back above 365, 368, and the price target above will be 372, and downside support below 361 will be a lot more cautious for the gap close below at 357, and if we close that gap and continue to trend lower, you want to get a lot more cautious because we could be coming all the way back down to close the gap at 349. But right now we have bullish price action and a bullish trend, so the Dow Jones is still looking very bullish. On the Russell 2000, we were up 0.57% today, but we still see the Russell 2000 closing below all the moving averages with the price action, but we are back above the resistance level, which was at 218, and we did close slightly above that level. The next bullish breakout will be back above 223, and we still need to see a breakout back above 226 to fully close the gap above 228. The strongest resistance above the gap close will be 231, and if at any point we start breaking above that level and closing above 234, the Russell 2000 will start to look bullish. Otherwise, you need to assume we're putting in a lower high before another leg lower. So this is still a downtrend, and this is still a lower high until we can clearly break out and start forming some higher highs on the daily chart. If we break below 218, look for support at 214 and the gap close at 213, and below that you're looking for 207 and 205. On the ARKK ETF, we did break down below $90 yesterday, and today we did test the next leg lower at $85, and intraday we were even lower, trading as low as $82. If we continue to break these support levels, the next support level will be right around $81, and that will be a very strong support level, and it possibly could be the bottom of this bear market. Remember, ARKK has been in a bear market for over a year, and it's in a full bear trend, and it's definitely dropped enough percentage from the all-time high to say that it's in a full-blown bear market. So if at any point ARKK starts closing back above $99, it will look like the bear market is possibly coming to an end, but we still need to see a decisive breakout above that level and start forming a bull trend. So to the upside, look for resistance at 90, 95, and then 99. And if we break above 99, you're looking for a bullish breakout back above the 50 EMA, which is right around 102. To the downside, watch that support level at 85 and 81. On the VIX, we were pretty flat today with the VIX going down about 0.5%, and we did see the VIX close below 20 yet again. Remember, if the VIX starts closing above 20, I want you to get a lot more cautious for a deeper pullback and possibly even a correction, but the correction will likely come when the VIX closes above 25. If at any point the VIX starts breaking back down below 18, that will be bullish, and we could see brand new all-time highs if we do see the VIX continuing to get crushed from here. On Bitcoin, we're currently trading down about 0.65%, right around 43,000, and remember we did break below 46,000, so the next leg lower is down here at 40,000. If we break below 40,000, look out below because we could be going all the way back down to 30,000. However, if we can hold up around this level at 42,000 to 40,000, we could still bounce, and if we start breaking back above 46,000, we could start going back into another bull cycle. The bullish breakouts, however, are actually higher above 51,000 and above 53,000, so the early warning sign would be 46,000, but don't get overly bullish until we can at least get back above 51 to 53,000. On NVDA stock, we were up over 2% today, and we did see NVIDIA bouncing off of that very crucial support level at 271. Remember, if NVIDIA breaks below 271, it's likely going for the next leg lower because that is the daily low on this chart. So if we break below 271, you're looking for strong support at 262 and 253, and below 253, look out below because the floodgates open and we're likely closing the gap at 233. However, price action did bounce off support at 271, so we need to respect that, and the next bullish breakout will be a close back over the 50 EMA, which is currently sitting right around 286. Above 286, you're looking for resistance at 292, and a bullish breakout will be back above about 301 to 302, with a strong resistance right around 309. So you do have a ton of resistance if you're getting bullish on this stock, and it does have a lot of downward momentum, so don't get overly bullish. I can't stress that enough because it could be breaking down and we could be going much lower, and you really need to see price action getting back above the 290s before we can break this downtrend. On Tesla stock, we were down just over 2% today, and we did test critical support, which is right around 1025. We bounced off that level intraday, which is bullish price action. We held on to the bull trend, but we did not break out back above 1100. So on Tesla, the bullish breakout is back above 1100, and then we could come back up to 1208 and 1240. And if at any point we break above 1240, we could go to the new all-time high at 1400. Now the bearish breakdown will be a close below 1025 or a close below 1000 for possibly a quick chip down to close the gap at 940. Below 940, you're looking for a retest of 900, and below 900, you're looking for a gap close at 843. However, we still have the bull trend and we're still above critical support, so I would favor the bulls. And I do think Tesla will try to break out yet again above 1100. And on a successful breakout, it could be a very impulsive rally to higher prices. On Apple stock, we were down 1.67% today, and we definitely see Apple stock looking a lot weaker, so you need to be a lot more cautious. We're 2 days now closing below the 20 simple moving average at 176, and we did lose the bull trend. So that does mean Apple is either coming back down to 166 or we're going to see some sort of sideways consolidation, and we're going to eat some time off the clock to see where Apple wants to go next. So look for the breakdown below support at 170 to tell us we're going back down to 166, or the breakout back above 176 to tell us we're going back up to 180 or the previous all-time high at 182. If at any point we break above 180 to 182, you're looking for the next price target up here at 188. On the financial sector, we were up 1.47% today, and this is by far the most bullish indication in the whole entire stock market. So if you're ignoring the financial sector, you're missing a very important piece of the puzzle. The financial sector is beginning to break out, and it's just a couple of days removed from a full bull trend, and there's no way the S&P 500 is going to crash or go through a full-blown correction while the financial sector is showing strength and beating its chest. This strictly looks like sector rotation, and this is definitely one of the sectors getting a lot of money, and it's very close to going back into a full bull trend. On the industrial sector, we're up 0.46% today, and very similar financials. We're seeing a lot of strength with bullish price action and a full bull trend, so don't ignore these signs that the stock market does still have strong sectors, and you're not going to get a full-blown stock market correction unless you see weakness across the board. On the healthcare sector, we were down 1.16% today, and we did close below the 50 EMA, and we did lose the bull trend, so you can clearly see this is one of the sectors being sold off in the favor of financials and industrials and even the energy sector. We still have a gap up here to fill, however, so don't rule out the possibility we could bounce off the 50 EMA and go close that gap. On the energy sector, we were up over 2.2% today, and again, you could see another very strong sector getting a lot of that cash flow with a bullish breakout, bullish price action, and a strong bull trend. Don't rule out the possibility the energy sector is going much higher from here because this is very impulsive bullish price action. So jumping back over the S&P 500, this is definitely a market you want to stay objective in, because if you zoom out and you look at weekly charts, you can clearly see we are still in a very strong bull market, and we have not yet broke down through critical support. Every day is an opportunity for something new to happen, so we'll continue to watch the price action and we'll continue to stay objective, but there's no way that I'm going to do any of that fear-mongering BS and try to call for a stock market correction while we're in a macro level bull trend sitting above critical support. That's just reckless, and there's no way you're ever going to be profitable in the stock market if you just get bearish just because. Wait for the confirmation, and if you're over leveraged and you're blowing up your account on small couple of percent moves, then you're not ever going to be profitable in this game anyway. Do some inside looking at yourself, and if you're blowing up your account, you're just over leveraging on tiny little moves. And remember, it's still possible the stock market goes through a 10 to 15% correction. So how would you possibly plan to stay profitable in a 10% correction if you're getting blown up on a minus 3% pullback? So stay objective, follow the price action, and have good risk management. Don't just recklessly buy the dip with a ton of leverage and have no idea what you're doing. Also on bank trade alerts, you can see we're currently up over 15.3% in the last 3 months, and bank trade alerts is crushing this market. It's an algorithm driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. With the recent market volatility in a brand new year, now is the best time to become a bank member. If you're interested in joining bank trade alerts, you can find out more information and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade, and I'm bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.